Location, location, location. I'm sure this is a saying many of you have heard time and time again, whether it be about a business, a restaurant, a school, or even a church. Location is everything. Today I'm going to talk to you about tips on purchasing a home, especially to those of you who do not have much knowledge on the subject. The source of my information is my own personal work experience, as I have been in this industry for almost 12 years. I started off in the banking industry and stayed there for about 5 years. I then moved over to processing in a mortgage business and stayed there for about 3 years. Now I'm in the title insurance industry and I've been there for about 4 years now. Location is the first and foremost in which to start your search. Keep in mind that if you have small children, school systems are going to be very important on your list of aspects. Where you grew up, where you work, and is the area safe are also aspects to keep in mind on your search. Once you have a few locations in mind, you will want to start going to open houses. This way, you'll only have to deal with the listing agent, who is the realtor for the seller, and you won't have to sign a contract with a realtor of your own yet until you find out where you want to live and what type of house you would like to purchase. The open houses will give you a good idea of what the market has in store for you. How big you want your house to be. If you have kids, you might want a fenced-in yard. You might want a pool. You might want a basement for their toys. These are all aspects to keep in mind when you go on your search. There are other amenities like fireplaces, how many bathrooms. Some things are what you really need. Some things are just what you want. It all depends on what price you're looking at. Remember, this will be the biggest decision of your life. Do this before deciding which realtor you're going to sign on with. Then let the realtor do all the tedious work while you concentrate on what you want. Once you sign with a realtor and choose a few houses, make sure that you look at the house on a rainy day. This way, you can see how the yard holds up and if there are any visible leaks in the house. Make sure that any changes that you want to make in your house of choice are only cosmetic and have nothing to do with the structure or expensive items like the roof or the pipelines. Even if you have a friend of the family or a person in your family that's a handyman and can fix small repairs, you don't want anything to be majored that will take up a lot of time and money. And always keep in mind that when you buy a home, you want to not grow out of the home. You want the home to grow with you. Since we're in a recession nowadays, it's definitely a buyer's market. Therefore, you never want to offer what the seller is asking. If they're asking for a price of $200,000, you never want to offer that. You always want to go a little lower. They're always negotiable as far as what the price, can be or what it can include. Always bid low, and you can always go higher if the seller denies it. Also keep in mind that the sellers pay for both realtors' commissions. But this doesn't mean that your realtor doesn't have to do any work. Remember, your realtor is there to help you as the buyer and your best interest. The second step is choosing a mortgage company. This can be a difficult choice as there are many salespeople in the industry that try to give hidden fees, and if you don't have much knowledge about this industry, you might be taken advantage of. Your best bet is to go with your current bank, who you have your checking or savings account with. That way you already establish a relationship with them, and most banks of that kind won't charge many fees. Another choice is to choose one of the bigger mortgage companies like Bank of America or Wells Fargo. Also keep in mind that you don't want to use a mortgage broker. A mortgage broker doesn't lend their own money. They're really just a party that's in the middle, like a third party that will charge you fees that can be avoided. Remember to just go right to the lender. That way your fees will stay low and you'll get everything that you need. In the state of New Jersey, the title company is the buyer's choice. They can choose whatever company they want to go with. New Jersey has state mandated fees, therefore the title company cannot overcharge you. They have to go specifically what is in the state manual. There's a good faith estimate that you will receive directly from your lender that will include all of their fees, including appraisal, credit report. Hopefully there won't be any added application or commitment fees that are unnecessary. But it will also show the title company fees. The title company will enclose an invoice and a preliminary HUD settlement statement, which will include all of their fees for the title insurance. The title insurance ensures that your property that you're buying has no mortgages, liens, taxes, and everything is paid on it. So when you buy it, you don't have the responsibility of paying for other people's liens. There's also some recording fees because with the new mortgage and the new deed of the property is going to have to be recorded into the county, and that will also be fees, but they're minimum. But the new good faith estimate that has the new RESPA laws will also include not only the lender fees, but also the title company fees, which they didn't have this time last year. Another thing to keep in mind is that the buyer has to be disclosed all of these fees a minimum of 3 days prior to the closing date or the settlement date. But normally the good faith estimate is one of the first documents that you're going to see, review, and sign. The final HUD settlement statement has all of the lender's fees that were already disclosed to you in your good faith estimate, but it also includes all the title fees, all the taxes, homeowner's insurance. Everything is broken down line by line, itemized, so that you know exactly how much you're paying for the whole entire transaction. I hope the information given today helps people seeking for purchasing a home, especially if they're first-time home buyers. Now I'm going to take this time to see if my audience has any questions.
You said that the seller has to pay both realtors. What is normally the percentage that they pay both realtors?
Usually it's 6% total. And usually it's 3% for the buyer's realtor and 3% for the seller's realtor. That percentage is off the sales price. So if you're selling your house for $200,000, 3% would go to the buyer's realtor and 3% would go to the seller's realtor. But that's always negotiable. You can always do 5%. Doesn't have to be 6, but 6% is the maximum.
Is it a good idea, or would it be okay if you're a first-time home buyer and you just look for a case where you're looking for a house for sale by owner to avoid the 6%?
For the seller, that would be a benefit because the seller would only have to pay the buyer's realtor if the buyer chooses to have a realtor. For sale by owner just means the seller is not choosing a realtor to list their home. So they would just put a sign on their front lawn that says for sale by owner with their phone number, and that would be the main contact for everything. You wouldn't have to go through a Weichert or a Remax. It would strictly be through person to person. But if you're a first-time home buyer, I would definitely advise the buyer to get a realtor.
How much money does a person need for a down payment or anything?
Sometimes they'll put $500, $1,000 when they sign the contract. It's best to put at least 20% down. That way it avoids PMI. But There's so many programs now with the recession. There's so many government loans that you can get away with only putting 3% down or 5% down. And, you know, with FHA loans, you're going to have to pay that MIP, it's called, for FHA. So there's really no way of getting around that. But 20% would probably be the basis of a down payment. Anything else? Thank you. Just show us all again. Share the audio again.
Everybody, including yourself.
Your screen went off. Your presentation.
Including yourself, Rick.
Didn't go back on.
We probably lost battery.
Oh, no, it's on.